Hi, this is Dr. Scott Young, and today we're going to get into the AI bubble that's about ready to break the stock market. We're officially in the third quarter here. We're in the last part, and today is actually Thanksgiving Day, but I wanted to bring this to you, and you're going to see this on Black Friday. Wow, interesting day, huh? But we're going to show you some stuff that's very interesting that's going on in the background of the world. Everyone's feeling the crunch. Listen to this one.
Just being taken over by AI.
Huge news for Nvidia stock today and why it could get to $300 per share easily.
Analysts believe the AI bubble is 17 times the size of the dot-com bubble and 4 times the size of the 2008 global real estate crisis, all due to one thing: greed. At the center of all of this is OpenAI. They're doing what is known as circular deals. Let me break it down. A company invests in OpenAI, then OpenAI immediately uses that exact money to buy products from the same company that just invested in them. What we have to keep in mind throughout this entire video is OpenAI is not profitable. They're hemorrhaging money set to burn through $115 billion through 2029. So how exactly are they signing these multi-billion-dollar deals? That's where it gets insane. Let's start with Microsoft. They've pumped over $13 billion into OpenAI. In return, Microsoft gets 20% of OpenAI's revenue. But here's the accounting trick. Microsoft is booking OpenAI's revenue as their own cloud revenue. When OpenAI pays Microsoft for cloud services with Microsoft's own investment money, Microsoft counts that as growth.
Here you go.
Thank you so much. Here you go.
Thanks. Thanks so much. Here you go.
Thank you so much. Here you go.
Thanks. Thank you.
But the Microsoft deal isn't even the most concerning. OpenAI just signed a deal with Oracle to pay them $300 billion over the next 5 years. Let me repeat that. A company that will lose $8.5 billion this year just agreed to a $300 billion deal.
And see, that's the craziness of the system. They don't have the money to do it. Let's show you what actually Elon says about it.
So even if you implement all these savings, you're only delaying the day of reckoning for when America goes bankrupt. So unless you go full Genghis Khan, which you can't really do. So
why not?
So I came to the conclusion that the only way to get us out of the debt crisis and to prevent America from going bankrupt is AI and robotics. So, like, we need to grow the economy at a rate that allows us to pay off our debt.
And I go, really? Is that really going to fix it? Can you really utilize AI and robotics to pay off everything? We'll answer that one because that's actually an interesting question. It's an interesting conversation. and he's saying go and Genghis Khan, Genghis Khan actually ripped up the whole world. Can you do it? And it's interesting idea, but listen to this one.
In 30 years. The US government's interest rates are now hovering at around the highest levels of the last 20 years, breaking out of what had been until very recently an extremely steady downtrend. As a result, we've seen the US government's interest payments on the debt go from $500 million to $1.2 billion in just 5 years' time. So just interest payments are now equivalent to now over a fifth of the government's total revenues. This is a phenomenon that the European Central Bank has labeled as the debt doom loop, where the loss of confidence in a national debt leads to higher interest rates, which leads to budget problems, which in turn further impacts investors' confidence in the debt. But the 60% of global reserves. This strong international confidence has been key to keeping a lid on that risk premium, despite quite high levels of government spending. And that was still the case until very recently.
So what he's saying there is this. So we'll kind of pull this off here. So what he's saying is this: if the interest payments are so high that no one wants to deal with the risk. So what they do is this, and this is the latest iteration of the craziness of the world. So just yesterday, They went off and spent $750 to buy back Treasury issues. And Treasury News doing this. Treasury, you know what it is? That's like taking monopoly money and buying back something that you had no money for in the first place. You have no ability to spend the money for it. That's not like taking money out of your savings account and paying for some debt that you needed to clear up. Like I've got to write, I've got to pay for the mortgage, right? So I've got to, if I don't have enough money in the mortgage, I'm going to pull money out of savings, right? And let's just say that was the case. But if that was the case, that because I haven't, I don't have enough money in checking account, I would move money out into savings, right? But that's not what happens when Treasury does this. And by the way, they have literally done this 5 or 6 times in the last month. Move 300, $400 million, $700 million. So they've moved billions of dollars. And the question is how many times can they do that? The interest payments in the last while, this, and I want you to see this. So look at the blue numbers. These are U.S. interest expense for the month of October is this red line. The interest payment for months in October's are these. Look at how bad it's been in other months, in other time frames, right? And then look at when Biden was in office, how bad it was, and now it's unsustainable. This is the unsustainability that happens when you get into circumstances like America is sitting at. Let's give you another look. The layoff tracker, US layoff tracker, is sitting at, oh my God, levels. Okay. So the green line is the US job cuts. The US layoff announcements are the red lines. Okay. So the announcements of what they say they're actually gonna do versus what they announcements are just as scary as what they're actually gonna do. So obviously announcements are another conversation. Sometimes they announce something that they don't actually do, but look at when they announce something versus what they're doing. What might these numbers actually in late October? Now, why are we saying that in November? November is a time frame, late November is a time frame when you look at Q3. What is Q3? I'm going to pull this off the screen for just a second here. Okay, so there's Q1, Q2, Q3, Q4, okay, quarters. Now, quarter is, we're in our third quarter. So that'd be October, November, December, okay? Q3 would be all the way through September, but it takes time to calculate the last quarter. Now it takes almost into middle of Q4 to figure out what Q3 was all about. Okay, so you just got to go like it's almost a half a quarter to figure out what Q3 was really about. Same thing happens every other quarter, right? So it takes a while, right? So for instance, if you wanted to know what 2025 is really about, now for me as a small business owner, I actually know what 2025 will be like late somewhere in January to early February. It's not that long for me. I'm pretty fast because I'm looking at a couple things, but basically by about middle of January, I'm probably going to have an idea of what that is, right? Now go backward here. Why were the actual layoffs versus announcements here? This is what the brilliance and the genius of Trump. This is what they announced versus what they actually did. I think this is the government shutdown. This is the cool thing I think was happening. Now, look at the unemployment rates. This is called the Fred or the Fed. Okay, this is one of the really interesting ones that you see the continued claims or the uninsured or the insured unemployment. Okay, these people are getting unemployment with that too. Now, a spike occurred in 22 or 21 when Joey was in office with that too. Okay. And then it went down a little bit here in this time frame when, the economy got a little bit better. I'm not sure exactly what occurred there. I don't remember the whole thing here. And we started to see unemployment start hitting. Now, there was a spike, interesting spike, that this is when the economy started to get really bad for Joey. Okay. Joey started to realize this is when everyone was going, oh my God. We don't actually know why all the things happening, but this is when debt and everything became a reality to the world, and no one could deal with this. And we'll show you more about some of that stuff here in a minute here. But these are the spikes of like, oh my God, and it's never fixable. These are I'm telling you, unfixable things, just as unfixable as this one here was, this is unfixable here. This is why this is unfixable too. You're never going to get this thing fixed until you actually fully flip the economy with it too. Then there's this black one here, okay? Let me show you this one. This is a bubble point, okay? So there are trends when we look at bubbles and the AI kind of thing. So let me show you this one. 2004 to 2008, there is a weird bubble that occurred. The first one here is in the real estate bubble. What would that be? Well, that was in, we had a spike in the economy, and this was in an ugly spike. We knew that there was something coming in the world that was telling us, uh-oh, something's wrong. There was a trend occurring, and these are when these spikes occur, what they tell you is that something's about ready to happen. Economic trends, and we don't always pay attention to them. And when they occur, they tell you, uh-oh, something's ready to happen. Okay. So, and by the way, I kind of sense this. I didn't fully sense this because the adjustable rate mortgages were told to me in 2003 or 4. I can't remember the exact date, but I didn't know I never heard about it before. And I've told people the story about this, but I was like, you what? You only pay interest for this? And the guy was like, oh yeah, it's a great thing. And I'm like, I'm not doing that. I want a real mortgage, a real 30-year mortgage. And when did adjustable rate mortgage actually, tank the economy? Well, 2008, right? But the spike was telling you something ugly was about ready to occur. The second spike is this blue area here. In 2017, we were sensing something was ready to happen again, and it was Bitcoin. What was happening then? 2017. Well, it was telling us there was another bubble point. This isn't even an idea of understanding the world. This isn't even awakened kind of things. If you're listening to me, this isn't even awakening kind of things. By the way, this is COVID. This is telling you about COVID. This sometimes happens years in advance. Okay. This is telling you something is happening, and the cryptocurrency. Why would this be so interesting? Because this is the blockchain kind of thing telling you it's about ready to occur. And this is when the sicko deep state was trying to bring in the Great Reset. and they tried to bring it in 2020. Okay. Look at where we are in the AI realm. They are trying to bring in the AI realm. It is so ugly here, it's not funny. It is way worse than any other time frame. You thought the great Great Recession was bad, and you thought 2020 was bad. The AI bubble here is so unbelievable, it's not funny. And let me show you another one here. Sorry. Now, many of you have seen me talk about this, but I'm going to do this one again. What these lines mean, first off, the below the lines are negative, above the line are positive. The brownish, tannish kind of things are available for sale securities, okay? Held to maturity sales. So for instance, what it means is that if you buy a security, okay, so let's just say you have a $50 million security. And if you hold it all the way to the blue, which means, let me just make it up a number. Let's just say it's a 9-month security. Okay. So what happens is that if you hold it all the way to the blue area, you can make a significant amount of money. Let's just say, I'm making up numbers. Let's say it's 10% in for that $50 million. Now, if you want to make a certain amount of money a little bit before that time frame, it's a little more risky kind of thing, a weird risky point. You can kind of cut it short in the time frame, but it's not as much money. If you hold it a little longer, you're going to get a little bit more, but if you do it a little shorter time frame, you're going to get a little bit less, right? So that's the tan area, but you get more money if you wait all the way to the very end. Okay? So this is kind of how they look at this. Now, who holds securities? Normally, it's the big banks, the big traders. Okay, so let's go back in time, 2006. Okay, and so, by the way, this is very, very similar to this idea over here with that. Okay, so 2006, there's negatives happening in the world. There's already something brewing in the world of negatives and negatives and negatives. And then the 2008 stock market crash, negative, negative, negative. Everyone's feeling the negativity in essence, okay? And then what occurs right here? An influx of cash. And we know this occurred, and people would tell you, the too big to fail movies and things like that would tell you that it happened in a $250 billion that they supposedly paid back. Treasury tells you, oh, they paid, the 13 Fed bankers paid back every dime of it within about 3 to 5 years or whatever it is. Bull. They didn't pay a dime of it back. Where did they get what money? Well, here's what we know, what we believe occurred is that $83 trillion. Yes, I said that number correctly. $83 trillion came into America to give an unprecedented amount of money. When you and I were fighting through some of the worst times of our lives, where people were losing their jobs, we were losing housing, the banks were making bank or buck left and right. It was so unfair. The stock markets were going up and up. The bankers were making so much money, it was not funny. And it's because they had stolen the money that was supposed to release to the American people to create what we call Nasara. This was this is the cutoff line. It takes time for it to make money. So it happened right about here, but it created gains like nobody's business. And I know some of you don't believe me, but that's why it took time for it to occur. Now, what occurs here is around this time frame. This is when Donald Trump was asked by the military to take over. I know this sounds funny, but this is when I was told in 2014 that he was asked to take over. Now, they were making money here, but why is it that they started losing money? Because Donald Trump started taking over. And the executive orders were written here. Executive Order 13818, 13848, they were started losing money like crazy. Why were they losing money? That more money than they lost in their worst time frames, because he was taking the reins back from them. Then COVID occurred. They made more money in COVID than they ever made in that time frame. This is when the fraud started to occur. But that was the setup. What was the setup for this? This is so bad. I have gone back through history all the way through 1929, all the way through the 30s, through the 40s. I've gone through every era. I have never seen anything like this. These are so deep and wide of conversations. There's no way to fix this. There's no amount of money in the planet that can possibly fix this. And I'm going to replay what Elon was talking about here, and we'll bring that back on the screen in a second.
So even if you implement all these savings, you're only delaying the day of reckoning for when America goes bankrupt.
Did you hear that? Even if you delay, even with all the Doge stuff, that's what he's talking about, you're delaying the day of bankruptcy.
So, unless you go full Genghis Khan, which you can't really do. So,
and that's all I want to say. He's telling you. I want you to listen to it one more time here.
When America goes bankrupt. So, even if you implement all these savings, you're only delaying the day of reckoning for when America goes bankrupt. So, unless you go full Genghis Khan.
There's no way to fix it. And you might go, Scott, you're just so you're scaring me. I don't know what to do about that. Because the point is, there's no way to fix the world in this way. The debt bubble the AI bubble is here. Bitcoin is not the fix. All this stuff is telling us we are near the end. Do you know the guy that walks through? There's an iconic thing. It actually is done on many shows and things like this. That you see the person that walks through, and he has a little sign up, and he says the end is near, and and it's an iconic thing. It's talking about end time issues, right? And the end is near. The end is near, and you see this all the time when there's like a comet that's really going to hit the planet, kind of stuff. Well, guess what? I'm saying some of the same thing. And yet, most of those people, when we see this kind of stuff, they tell you, people who believe in the Great Reset say, the dollar is going to crash. And by the way, I like Glenn Beck, but he'll tell you the dollar is going to crash and there's nothing on the other end of this. And I say to you, no. If the dollar is going to crash and there's nothing on the other end of this, and there's nothing like gold on the other end of this, then America is going to go Mad Max. I'm telling you, we're going to flip from here to here. And you are going to be okay. It is going to be okay. And I promise you, this thing is going to flip. It's going to flip fast. And it's going to be bad for them because guess what? We're going to make the deep state swallow this whole, swallow the debt. They are not going to win. They're going to lose. They're going to lose their shorts. They're going to swallow this, and they are losing everything. They will never make it. And the point is, I keep telling people this. You are going to be okay. I promise you it's going to be okay. Your bank accounts are going to be okay. You're going to see us go into a gold-backed currency. We're going to see the end the Fed, the end the IRS. We're going to see tariffs take over in that circumstance. We're going to see prices will go all the way down, and we're going to see an ability to make an amazing living, and it's going to make a big difference in your life. Thanks so much.